All
Streaming.
right, yeah, I'm gonna literally tell everybody in my after hour right now.
Yeah, I'm doing after hour too.
I'm finna
Yeah.
share the link.
Royalty, you posting it on after hour?
Yeah, and
All
then I'm
right,
finna
cool.
post it in the Discord too.
I'm gonna share your after hour link.
That's what I was thinking. I was like, dude, I can't remember these tags half the time. So I'm just gonna whatever royalty puts something about it to share it.
Exactly.
Don't reinvent the wheel for that one. Oh man.
Woot
Cool.
woot.
There we go.
Nice.
Let's give everybody a couple minutes to hop in while we watch Bitcoin do what it do.
Ooh,
How's Bitcoin?
it's doing
Seven.
its Sunday thing where it's crashing and then it'll come back up by tomorrow.
Yeah,
It
it's
Damn,
won't
sitting at
come off.
about
ultimately, I
80K
would
right
love to
now.
get a 61.8 fib retracement off on Bitcoin. I would definitely dump my money on that.
What number did you just say?
Oh, a 61.8 retracement? That'll be around 74, 72K.
61.8.
Not bad.
Bro, if it goes to 61.8, yeah, I'm backing the truck up.
Backing the truck up.
Let me double
That's
check here.
funny.
Yeah, yeah. It's literally around, it's kind of hovering around the 50% retracement from that giant parabolic move ahead. Not bad, it's working on basing, I guess. Who knows? We'll see.
It's
Bro, I'd
already
love
broken
doing
past my
I'd
first
love the
buy
full
zone at
analysis.
81, so we gonna see. I got a buy zone at 81, 79.2, 76.9, and 74.7. So we're gonna see
Yeah.
how many of those alerts go off. Okay, how do I hold all of that? All right, well, we got 14 people in the chat so far. So look like we'll go ahead and start. What's going on, everybody? It's your boy Royalty Trades. Welcome to the Kingdom Podcast where we try to, drop the best educational content for the stock market that you can find all around. I got trying to make it. I got Fridge Financials, and then I also got your boy New Fish Big Pond. We're gonna do our best to go ahead and drop everything that we can over the previous week and leading up to the next week to get everybody, locked in and ready to go back to war Monday. So, how y'all feeling, man? Everybody good?
There he is. Everybody feeling? Talk to us, man.
I'm doing all right. I hope everybody is. Hope everybody's had a good weekend.
Everybody in chat tuning in. Hope you guys are doing well. It's a lazy Sunday. I feel it.
Okay.
Yeah, daylight savings got me messed up, dude. The hour ahead got
Yeah, I
me
got caught
waking up.
off guard with that. I
I was
didn't
like,
even
I
know.
just lost an hour of sleep. I was like, oh, dude, that's the
I
worst.
got caught off guard.
Yeah,
Mhm.
look like everybody's trickling in. We got Bob, got Alice John Doe,
Nice,
Tony
nice.
Clark, Crypto Clueless, High Tech Redneck T. Who else in here? Who else? Chad
This
Marburger.
is a cozy place for
Like,
charting and market analysis. Everybody
that's
tune in,
what's
tune
up.
in.
Gerald Bellamy, what's good? Everybody popping in, popping in. Um, let's see. Today we can kind of do like what we did last week. Um, let the Professor Fridge Financials go ahead and drop his economic knowledge to us and let us in on the deets about what we got to look forward to and what's gonna kind of give us a little guidance as far as that side of the market goes. So, what you got for us, bro?
Dude, man, you always got me going first, man. It gives me a little bit of pressure, honestly, because it's like, dude, I like to kind of sit back and listen. It's a nice, relaxing evening. Yeah, man. I mean, market was crazy last week, as we know. We had 1% moves, I think, almost every single day at some point. I know Friday was like they ended up like up like a quarter percent or whatever it was, but it was down like 1%. Dude, the Q Master, I'm ready for it. Don't worry. Yeah, so we had a crazy day, crazy week in the market. A lot of data came out last week. I'm trying to remember pull up what we had from before. We had a lot of speakers. We had Trump speak. We had Jerome Powell speak, which was absolutely wild. Um, the biggest thing that was a huge shock to the market, I think, was jobless data and everything. We had initial jobless claims came in, not too good in that case. Same thing with continuing jobless claims, also So right now, again, we're still just walking this thin line of just it just is just up in the air kind of thing. Right now the market's pricing in 3 cuts for the year. And I made videos in like January and I was like, dude, we're not gonna get even 1 cut. Now we're looking at 3. So markets are coming down, and I think that's why they're starting to see more of those predictions for rate cuts coming in. It's absolutely wild. There is also, some data coming in this week. We've got JOLTS report on Tuesday, so some more job data with the job openings, labor turnover, all that kind of good stuff. It's supposed to come in higher than expected, and or higher than last month, which to me is a little bit of a concern. As we see, if we have more unemployment, we have higher jobless rates going up and everything of that nature. We're looking at possibly a slowing down of the economy. I know right now we're looking at a negative GDP from the Atlanta Fed, which to me is a huge red flag in the making. If you guys are not aware of usually how economics works, if we get 2 negative quarters of GDP in a row, it's considered that we are in a recessionary period. So if we come in the first quarter with a negative GDP, all eyes are going to be on it for quarter 2 to see if we hit another recessionary period. Last one technically was the COVID pandemic in 2020, which was a very short-lived one. They marked it as a recession, but they didn't really say it was. So very, very fearful in the market. A lot of fear going on. People are freaking out. And if we see some job data come in that's going to show a softening of the markets, it's not going to look too good. The one thing I will say, and this is where I think the big hitters are going to be coming in, is Wednesday, Thursday. We have CPI and PPI data. So consumer price index. You have producer price index, which is focusing on showing inflationary values. Where's inflation happening? Where is it not? These are supposed to come in lower than last month, and that's good, because if inflation comes back down a little bit, that's awesome. It kind of gives a little bit of relief to the market. My big concern is if these numbers come in higher than expected and we have a higher inflationary values from CPI and PPI from last month, I'm thinking we're gonna get more red in the markets this week. It's very, very tough. It's very, very frustrating to watch. If you were in the Discord, you might have seen me post some charts up there over the weekend, which was amazing stuff. It's not uncommon that we have these 5 or 6 day increments of 1% swings in either direction. It happens usually almost about once a year. So it's nothing that we haven't handled. And if you take a look back, and I gave this advice on After Hours a long time ago, or a little while ago, I should say, looking at the bigger picture, dot-com bubble recovered to all-time highs. 2008 housing market recession recovered to all-time highs. COVID pandemic recovered to all-time highs. This is just one of those things where things are on sale. If you're looking at retiring 10, 20, 30 years out, you're going to be fine. It's a flash sale for people. It's a lot of fear. And this is the time where you really do take that into consideration for things as we go here, so be a look on data. It's a frustrating market for all of us, myself included. But, if you think about hedging your portfolio, I hedged my portfolio on Friday because we had a green day. I was able to hedge my main portfolio. The more you can hedge it to kind of offset those losses, the better off you're going to be long-term for sure. But don't get into that panic selling mentality. It's the market. We're used to it. I've been down $3,000, $4,000, $5,000 in a day before, and I've wanted to cry and delete my portfolio. But it recovers back up. It's all about matter of perspective for things. And I'm trying to think about if there's anything else coming up for data. Bro's been really, of course, Marv's, dude. That's what we always do here, guys.
Yeah.
I know somebody said about China deflation. I haven't looked much at that chat. I'll have to take a look at it when somebody else is talking, because I got to pull up some data on that part. I will do some research on that as well. I'm trying to see if there's anything else, really. There was a good thing that I found over the weekend. It's carsongroup.com, and I can link it in the YouTube chat for you guys who want to take a look at this. This is some really cool stuff to look at as well. This is the website I'm looking at right now, and it gives some really interesting perspectives as to why you shouldn't panic in the market. They show some charts about how chopping and frustration is very common very early on in a post-election year. Trying to get used to the new people in charge, trying to get used to the new cabinet, trying to get used to new people that are in power. There's a lot of chopping that usually is going to happen in the market the first couple months. Over the long period of time, though, this is tracking back over 70 years. Usually get a nice return of about 7-8%, give or take, within the first year. So it's a very, very choppy market for right now because, again, it's all the uncertainty. We don't know what's going to happen. March usually is one of the better months of the year. March and April, usually, besides like November, December. February usually is known as being one of the lower months of the year. It's February and September that are the ones that are the lower ones. So it's not a surprise that February turned off as a bad note for us in the markets. It's nothing crazy in that aspect for sure. And then I'm trying to think if there's anything else really to cover here. If you guys want to drop any questions, of course, please feel free to do so. But, there's a lot of data that goes back 20, 30, 50 years about where the market's going to do in March. And is it guaranteed to happen? It's not guaranteed. Nothing in the market is guaranteed. Just because it happened in the past doesn't mean it's going to happen in the future, but maybe it does. So I'm not worried. If I was freaking out, I'd be saying I'm going to sell every single thing I got, but I wouldn't be worried about it, honestly, the market. So be on the lookout. Jobs reports, CPI data, PPI data. Big thing also, FOMC meeting comes out in about the 19th. So not this week, but the following week. That'll be talking about Jerome Powell, talking interest rates and everything else. So be on the lookout for that. I'll be posting on my analysis on Jolts more in depth tomorrow on After Hours for sure, so I can get a little bit more of a reading on it. But yeah, that's what I got, Royalty. Hopefully, I covered a lot of stuff for you and killed some time for the day.
Appreciate it for me and for the people, but that's definitely a lot that the market has to digest. And what I've been saying, and y'all probably been seeing it too. I mean, it's just a lot of conflict, for one, between tariffs, two, between Trump and Jerome Powell, on the rate cuts and the interest rates and everything like that. I mean, I just feel like it's gonna be hard for the market to find grounding.
Yeah,
When you
yeah,
got the
definitely.
president and then you got Powell, actually bumping heads. So I know that's gonna be a big deal.
Yeah, but I mean, I think at some point, they have to get on terms at some point. They're gonna have to line up for the greater good of the economy. I feel like, just right now, it's kind of like almost. I mean, I'm not gonna use any inappropriate words on a live stream here, but it's kind of like who has the bigger, and trying to see who's got what. So it's trying to see basically like, hey, I'm the one in power, and Jerome Powell's like, dude, I don't care what you do. So right now it's trying to see who is the one that's like trying to establish that kind of dominance. But they're gonna line their ways up here. If you think about it, also with Trump and his tariffs, as you bring up, he says things and then he tends to pull back a little bit. He says things, he pulls back a little bit. So somebody's in his ear talking and be like, dude, like you need to understand what this is doing to our economy, right? So I think with that aspect in mind, because if he really fully, truly didn't care, he would just let it rip the band-aid off like a month ago and just let it rip and just be like, whatever, nobody cares. But there's somebody in his cabinet, somebody that's up in that level position that's telling him, hey man, this is what's going to happen. Here's the repercussions. Look at the markets. Look what's going on here. There's somebody who's telling him something. So, because
Yeah.
otherwise he would have ripped it off a long time ago, So I think with that idea in mind, I think he's trying to kind of like push his way in with tariffs, but he is somewhat trying to do it in a way where it's not super aggressive. Isn't like, you know what? How about we do automotive, from Mexico and Canada? You get a month delay for it. How about these couple imports, exports get a little bit of a delay on that one? Like he's trying to push it, his narrative. But I do appreciate that he's now overstepping his boundaries in terms of like pushing and being like, I don't give a crap what anybody else thinks. Canada, nobody cares. Mexico, nobody cares. I'm doing whatever I want to do. So there's somebody who's giving him that kind of like conversation. I think he's giving him an eye opener for sure on the tariff aspect.
Yeah. I I agree. Somebody in the chat said, do we think Nvidia has dropped past support levels? Bro, I think Nvidia, I mean, it depends on what support levels you're looking at, but we're gonna get to that. We're gonna get to that once we start looking at some more charts. Um, but to answer your question real quickly, I don't think right now is the time you want to. Well, it is, but we want to wait until it actually finds a bottom first. You don't want to see what happened to Tesla over the past weeks happen to Nvidia, where you keep trying to buy the dip and the dip just keeps dipping. So uh, definitely want to wait on the bottom to form on the market before we start buying anything, unless it's just 10, 20 years out from now. So, hey, Fish, you got anything you want to throw in on economically or what you got going on with it too?
Well, to touch base on Tesla, man, I mean, I think if you're thinking about Tesla puts, that may not be a bad idea. Tesla unfortunately has lost so much of its value recently. and the global backlash to Elon. I'm not trying to get political here. I'm just talking facts. The
Facts.
global backlash to Elon is resulting in mass protests outside stores in Europe. There was a fire at one of the dealerships or something like that in Europe as well. And then I saw today somewhere in the U.S. there was a huge protest at one of his dealers. So, you know,
Oh, really?
yeah.
Yeah,
So
I was
like I
here in New
think
York.
in New York. Okay. So
Yeah.
yeah. So I mean, there's a lot of backlash coming to Elon, and that's just going to trickle down to Tesla. So I don't know if you like playing puts and you don't mind it. I think that might be a good way to go right there. Um, we were talking about recession, so I'll just bring it up right now. If we do go into a recession, I think UPST, Upstart Loans, I think that's a good stock to hold. They specialize in giving loans to people with less than stellar credit, personal loans. So if the economy starts slowing down, people start losing jobs, yada yada yada, they're gonna need money.
I was gonna
The
say the
bills.
chart look good.
What's
It
that?
well, I said the chart doesn't look too bad. I mean, it's dropping, of course, with the rest of the market, but it's filling in a lot of zones where buyers gapped up from. So um, I think that's definitely a solid buy once it recovers.
Yeah. And if you look at their past earnings statements, they've done well on their past earnings reports. So that's something to think about as well. Um,
Okay,
you know, shares or leaps, wherever people are comfortable there.
man.
And then,
Go ahead.
oh no, go ahead, go ahead. Do you
No,
have something?
no, I was gonna say. I think Fridge was doing something along the lines with that. Tapping in with people doing the loans. I can't remember exactly what it was, but he was doing something that he was sharing. I thought it was pretty cool, but it was a way to get in on that too.
You're talking about peer-to-peer loans?
Yeah, yeah.
Yeah, dude, peer-to-peer loans actually is not is I mean, it's kind of cool. You basically got to be a bank without like actually having to have like millions and millions of dollars to be a bank. It's actually kind of nice actually. And like in this
Oh,
kind of time period, like right now I'm making like 11% a year on like all the money I have loaned out right now. So it's stable at least. And if you do the research and the diligence for it, it definitely can give you some nice payout for sure.
hmm.
Hmm.
That's very interesting. I didn't even know that existed.
Exactly.
Yeah, and
That's
you only
what
and you
that's
only
what I
need like
said.
$25. It's actually like I start with $25. You put it in there, and like they do a lot of things. So it's not like anybody can ask for a loan on the website I use, but they rate it from like double A like loan like a loaner down to like
Mhm.
F, and like obviously the F people are like 30-40% interest rates, which is ridiculous, and they're probably not going to pay that. You look at double A, single A, like they're looking at like 11%, 12%, interest rates, but they go through, they do a whole background check. They give out their employment history in terms of like, not like what their job is specifically sometimes, but it'll be like, oh, this so and so's been working, in business for 15 years. This is their income they make. This is what they claim their income is. So they give you a lot of information behind it, what their FICO credit score is as a range. So they give you a lot of things to really help you feel confident that like this person will pay it back. And compared to just being like, I'm just throwing money at a dartboard and hoping that somebody's gonna pay it back. So it's very, very cool. And it also, it helps out people, believe it or not. So like my heat map shows like all over the country. It helps someone in Texas. I hope someone in California. It helps someone in Wisconsin. So it's kind of really cool actually. But yeah, I like it. This is my first year. I filed taxes on it, obviously, because I have capital gains on it. But it's pretty cool. It's something that definitely to look into, I think, for sure.
Hmm.
That's awesome.
Hey, when I heard about it, I was the same way. Like I didn't know it existed, but of course, I'm always kind of sketchy when it come to money. I be like, what if they don't pay their money back? Like, where we go from there?
That
Right.
Cause
that's why I'd rather invest in a company like Upstart, Let them
Yeah.
deal with all that.
I'll be ready to go
Yeah.
go to your door, man. Hey, look, where do you people live at? Cause we need to have a talk.
But the thing is that so far I've been doing it for over a year now, and I've only bought into like double A and single A loans like types. So it's like the best kind of ones you're getting for returns usually. And I haven't had one person default yet, knock on wood, obviously, but um, yeah. So
All right, that's what's
is
up.
there a limit to buy into that? Royce says. No, there's no limit. You can start off with $25. The platform I use, $25 minimum. You can put 500 in, 1,000 in if you want to. I'm just throwing in $25 just to kind of see what happens. In that case, so.
Very interesting.
Mm-hmm.
Okay. Which company was that? Somebody said what company was that?
You talk about like what the website is that I use, or
I
like you
I
talking about
believe they was
Upstart?
trying to see, yeah, what that was. What
Yeah.
is it that you're using?
I use Prosper, so PRO. I can type in the chat. Prosper.com usually. They have an app too, which is really cool. It's really easy to use. So Prosper is the website. They do have a lot of good ratings over the years, and there's an app that they use that I think is really really slick, really really clean. It's where all my screenshots come from usually. Really easy to set up. Takes no time at all. And you need $25. That's the thing I like. It's better because like you look at different ones of like loaning money out to people and stuff like that. Um, and they're like, oh, you need like $500 minimum. You need like $1,000 minimum. You know, like this one's $25. So if I'm out $25 in the day, I really don't care. Like $25 to me is like whatever. You know, so it's like that kind of thing where you're not afraid to lose that kind of money.
Yeah. Okay. Fish, you had something else that you wanted to cover?
Yeah,
Anything else?
yeah, man. So Bitcoin, right? We've all seen it dropping today. It's at like 80,700 right now, like give or take.
Yeah.
Um, we're right there in the consolidation zone. This is actually a healthy thing. I know a lot of people are probably freaking out about it, either selling or waiting for a lower dip. Some people are calling for 69,000.
Eesh.
Personally, yeah, exactly. Personally, I don't see that. But I mean, we could definitely go a little lower than where we are now. But what I did see today as I'm watching it is as soon as it hit 79.9, it popped right back up to 81,000 pretty quickly. So it looks like there might be some good support there at the 80,000 level. I'm watching it right now. It seems pretty stable-ish. Finally saw a green candle, so that was good.
Yeah.
Um, and then if anybody's looking to get into MicroStrategy or MSTY or any Bitcoin related stocks or ETFs, tomorrow could be a really, really good chance to get in. Um, I mean, obviously don't blow your whole wad all at once, DCA. Uh, but I also have noticed over the past few weekends that Bitcoin will drop over the weekend, and then by the time market opens on Monday, we're back up at around the levels that we were
Yeah, I've
at
been seeing that.
Friday close.
I've been seeing
Yeah,
that happen pretty frequently too.
my theory behind that is that Mr. Market doesn't want us peasants to prosper from the dip, you know? So while we might be able to buy Bitcoin over the weekend, we can't buy the Bitcoin related stocks and ETFs. So while they might be, I'm not exactly sure how dark pool works, but while they might be trading on the dark pool right now, we certainly are not. So. We'll have to see where things go, but I do expect us to start having a nice tranche upwards within the next few weeks.
Okay. Okay. That's pretty dope. All right, then. Well, let's see. Trying to make it, bro. You good? Is he it?
Yeah, yep. Sorry, yeah, I had my mic muted. I was trying to talk. I was talking about myself. What's
Oh,
going
okay.
on?
How
We
you
tuned
feeling,
in. We
man?
tuned in, man. I'm feeling great. I feel like everything that we're chatting up about here. I feel like the market is definitely trying to like kick people out when they're trying to get in. You know what I mean? They're never gonna make it easy for you. That's what the market makers are here to do. Make it a challenge. And our job is to like, break the puzzle, find the pieces, put them together.
Yeah, I agree with that. Well, let's go ahead and start breaking down the ETFs first.
Yes, sir.
And then from there, we'll start taking some requests in the chat, and pretty much
Yeah, guys.
give you guys some levels and some guidance on some of you guys' favorite tickers and everything like that. So I'm gonna go ahead and start off with SPY, of course.
Yes, sir. Yes, sir.
Um,
Big old spy.
bro. So right now we are seeing, of course, the downtrend. And what caught our attention last week, well, my attention at least, and I posted, was this big bearish engulfing candle that we saw on this day. So, if you guys know anything about candle patterns, once you see um, what's called a bearish engulfing candle, or sometimes we can see a bullish engulfing candle, but it's when the high price and the low price completely engulfs the previous day's trading at price action. So you see the prior two, you saw 594 as the highs, and then we seen 582.65 as the lows. The following day, we saw those highs, but immediately sold off and took out the previous day's lows, which shows a significant amount of selling pressure, which should throw up red flags trading on, you know, every day going forward. So what we've been seeing is kind of a recovery, but each day is leading into almost making lower lows. So right now, I do have my buying zones labeled out, and these are the areas to where I get my alerts and I send my alerts to the Discord, and they get the alerts too. So that way, they can see exactly what it is that I'm getting and where my mind is when he's starting to pop off. But as of right now, we have been losing levels. We have been making lower lows and lower highs each day.
This is when
So,
Vicky got caught up, right?
huh?
She got caught up on this.
But
Sorry. So sorry. So
oh
sorry.
no, no, you all right. But as of right now, I was looking at 579 being our level after we gap down this day right here. So what I was watching for was either a retest above 579, and then you will short it back down just because it's trading back into this bearish price action. So um, we didn't quite see that, and I was thinking that we may have saw it this upcoming week. But as of right now, looking at the futures, with them being down, with Bitcoin selling off, we might see some pressure,
Mhm.
bearish
Mhm.
pressure going into tomorrow, and we might want to look for this 566.89 level to hold. It was tested here, and if we go in a little bit further, it was tested here and it held pretty well and it traded back up. We didn't quite really hit that target back up there to 578. So if we gap down again, we're probably going to look for any type of support down here at 559 to 560 and see if that holds up and pushes us back up towards this 579. So I have double support here, which, like I said, even if we gap down, then at least it gives me some confidence that we're gonna at least make the move back to the upside to 579. It may take us a day or two, but eventually I think that it'll recover. So that's my outlook as of right now. Things can change overnight, 24-hour market. Um, things can definitely change and we can recover and we can end up opening flat. It just all depends on, how these how they want the prices pretty much opening up tomorrow, especially since everybody's kind of watching it right now and they're seeing weaknesses. Trading psychology for me means, all right, if they're giving you the obvious, don't really expect the obvious until everything that leads up to that happening happens pretty much. So just because everything's bearish right now doesn't mean that it has to stay bearish in the morning. Like I said, we could open flat and then we see this retest in the morning before it decides to flush back down, which just shows us that was the move coming all along. It was just the timing, which I've been telling a lot of people under the comments on after hours and in the Discord. The plays that we see could be very nice plays. It's about timing the plays that makes a big difference in how your returns look. So, let's say if you get down in a put here, it comes back up and you retest this before it comes back down and reaches your price target. Everything's about timing, and they're pretty much looking to fake you guys out every day, just because they're not gonna make it easy for you to make money. You know what I'm saying? If it was, everybody would be doing it, but obviously they're not gonna make it easy. So sometimes when you looking, pre-market or In the 24-hour market, you might see one price. Sometimes, in my opinion, is to build your psyche up to prepare for that move. Get you all anticipated and get you ready to take puts, and then it throws your timing off once the opening bell comes up, and it does something different to what your mind got set on doing, and it kind of messes up your whole timing of everything. So um, that's pretty much my take on SPY. If we open low, then we're gonna look for support around this 560 area, and then if we open flat, we just gotta wait for the move to present itself. We trade up above this 579. We'll short it going into this the top of this supply zone back to the downside. And even if we seen it trade back up, just because you have bulls that was over here that kind of got burned. We're bearish until we take out those highs on this candle right here. The top of this bearish engulfing candle, we're bearish until we take that out, and then we start to build back up to the upside, and try to take out these previous all-time highs at 612, and then probably push higher. We can build above 613. That's when we can start seeing um, probably push up towards 650 or whatever far into the year. But as of right now, we don't want to consider anything bullish on SPY until we take out this candle right here. And the highs is around 597.01, 597.31. So don't decide to go long. Let us find the bottom. And once we find the bottom, next week, that's when we can start building from there. I don't know what it's going to take for us to fill this gap down here at 507. It's probably going to be something about inflation or something along the lines, but this will be a tank scenario whenever we fill this 500 to 506 area. So let's take a look at Qs real quick. Qs had a massive sell-off. We haven't even really found support. This is what I mean when I say don't try to time the bottom. I can draw a straight line through every day's price action, and each day it's just been making lower lows. So when you're saying buy the dip has to start forming first. Once we find something like this, once we drop and then it starts to make a recovery, this was supposed to be the area to where we was supposed to hold levels for the continuation to the upside. But since we didn't hold this level down here, one day it traded and it actually bounced there, but the following day and the next day after that, it finally gave away and we broke below this 510 level, and we've been selling off ever since. So right now isn't the time to try to
I got
time
it.
the dip. You want to just pretty much wait for the dip to present itself to you and wait for the bottom to start forming before we just see something. You want to see something along the lines of this arch kind of giving way, and this will be your saucer style bottom, and this will let you know as long as this U shape right here holds, then you can start looking for some recovery. But if you don't see this, then there's no bottom forming yet. So if we continue to dip going into this week, I'm gonna be watching for a bottom around the support level at 473, and then we'll look to see if we can form a bottom around here. That'd be nice if so, then we can start pushing back up toward this 518 to 519 level and see how prices react around there. But as of right now, ERs haven't been looking good. Tariff news hasn't been, too good. I mean, they might be getting an extension as of right now, or certain things, he negotiating. But as of right now, he hasn't said they're just completely out the door. So the market just has a lot of uncertainty going on, just a lot of uncertainty. So, um, I mean, how long do you think we'll probably be looking at? I mean, you think CPI changed something like that, Fridge?
I mean, I think it's one of those things where CPI data can come in, and they always say something. The Fed doesn't use CPI as like the preferred inflation measurement. They usually use the PCE data usually, which is the personal consumption expenditure. But CPI data definitely gives you a little bit of insight as to how the consumer reacts and how the consumer is spending money and everything. I do think that like these little blips, and if you get like a nice little beat on inflation this week, you might get a little bit of a pop in the market end of the week, especially because Wednesday and Thursday is inflation data. Friday has nothing going on. So you might get a little bit of a relief rally maybe Wednesday and Thursday. CPI definitely has more of a weight, I feel like, than PPI does. And in my personal opinion on it, it seems like the market reacts more to CPI data. I I think that the thing is though is that just having one good data point isn't going to be enough for this market to all of a sudden flip around and on its head and become just straight up bullish again as we go. You need a lot more things to align in terms of making sure that you don't see this, slow down the economy. You see the job market start to kind of cool off a lot. You see unemployment going back up again. That was a big thing that happened last week was unemployment came in at 4.1% and it was expected to be at 4%. So if we get an uptick in unemployment, and we got to slow down the economy, you're going to be looking at possibly having more of that fear and greed. So you need that more of that fear coming in. So I think the big thing to really is that it would be a good starting point if CPI and PPI come in lower than expected, but it won't be like the dramatic market flip. Okay, we're good to go. We're bullish for 2025 just yet. I think we need a lot more data points, a lot more things to really show that our economy is still pushing strong and that there's no signs of us slowing down. I think right now nobody knows that, and that's why it's kind of all over the place still, in my opinion.
Yeah. Charts. Trying to make it. You got some charts on anything you want to share with the family?
Yeah, I wanted to add a little bit to the SPY analysis that you were breaking down because I agree on a lot of points, and I also wanted to add a couple of levels, and I wanted to shed light on a couple support levels that we've seen from Friday and see if they carry on into Monday, and probably what would happen if they don't.
All right. Let me get your screen up real quick.
Of course, of course.
All right. You up?
Okay, so I'm gonna start off with a little 4 hour chart analysis. Currently, I'm gonna start off with the obvious. We have a 50 MA break over below the 50, and below ever since that happened, we had a confirmation of the double top formation that we had here, and below the gap fill, which is also a FEG support on the 4 hour, which eventually broke below, confirmed this downside that we see here. And as we kept going down, we started finding a lot of resistance on the 5 day moving average. We would break above it a little bit, but nothing but, like you guys were mentioning in the comments, a lot of pops and dumps. Pops that we would short, and then these dumps that we would get back into to get back in for the pops. A whole lot of that. That's a lot of what we've been seeing. So this type of action is definitely something that we call, a grinding down kind of momentum. So this is why I outlined this wedge here. And I'm really just watching to see how the resistance levels and support levels continue to react here. Currently, we are also seeing resistance levels from the 28 moving average here. This is the green line that I have here. And currently, I wanted to point out that on the daily chart, from the Friday pop that we've had, that we saw, end of day, it was directly off of the July highs around 565.23-ish. That's a rough estimate. And this level is very, very important because it also pertains to a high that was lost in July. And as you can see, we had a big, downtrend that ensued, a big dump that ended up bottoming and then continued up. Currently, we're seeing a 7% decline. This was a 9% decline. Possibilities of bad news causing the market to fall down even lower from where we're at is possible, but I'm looking for a break below 565 to confirm that. Currently, I'm kind of looking at what the chart's giving me, and I don't see any bottoming formation yet as of now. That's kind of what I'm looking for. This little 5 day moving average support is very important. It's a start. We could lose it, but then that'll be in confluence with a possible bottoming formation. So if you guys look at the 1 hour chart here, we could see 569 or around 570 would be a very important level to hold come Monday in case we dip down lower. And I'll start looking for more confirmation there and see if we can get a pop out of the wedge eventually. But anything could happen in this market. You guys have to look at these support levels here. Right now they're acting as resistance, and if we get a support resistance flip and a breakout of the wedge, those are the type of confluences that we're looking at. And we also have a 4-hour bullish divergence, kind of congestion here that we got going. We got two bullish divergences back to back. These are very powerful indicators because they have shown reversals in the market prior times, as you can see here, here as well as over here. So it's not an indicator that I would ignore, but it is an indicator that I'm keeping in the back of my mind because it's not exactly telling me that we bottomed out already. So it is something to, keep in mind because we could see a little bit more downtrend, maybe below 565, we can see 560, possibly 555s and 550. And if we do get some type of bottoming there, then we could probably see some type of uptrend. But as of now, these are the confluences I'm working with. Like Royalty mentioned before, catching catching dips and falling knives and stuff like that is never the way to go. You kind of want to react to what the market gives you instead of just hopping on the first kind of like thing you see. If you see this green candle, a lot of people could have reacted off of this candle, and the next candle could just be red, sell off the whole entire move, that kind of thing. You want to avoid that. So by doing that, we wait for bottoming formations. We wait for real confluences that show us that, hey, the market is coming to a bottom, maybe a temporary bottom, and a relief could ensue. So that's my intake on SPY for now. I'm looking at these levels, starting at around on the 4-hour chart, starting looking for support above 579 to regain more traction towards 580. The 50-day moving average with volume and confirmation could hold and be a magnet to price. But we need volume, we need good news, we need less fear in the market. So we'll see how we look come next week, guys. Yeah, I appreciate the time on that. That's my little SPY analysis that I got right now.
Uh, what else you got? I'm pretty sure they finna start dropping tickets. Hey, y'all go ahead and start pushing your tickers out. Let us know what you would like us to look at. I think we seen somebody post something in the chat a little bit ago. American Bulldog fan band. What's up, fam?
What's good, American Bulldog? What's good, family? We out here, man.
Royalty, do you
You guys,
look at OI, Greeks, and other things, or mainly charting? I look at everything. I always tell people when they
hmm
get into options, looking at the volume on the contracts, looking at the open interest. You both want to have those. Majority of the time, you want both of those to be over 1,000. Every once in a while, you might get something in low volume, and that's because if it's super, super far out, like, a leap or something, it may be low in volume, but it may be super high in open interest. Definitely want to look at those Greeks. You want to make sure that your delta outweighs the theta, especially if you're swing trading, because you don't want to give up so much cash just holding the contract, especially if you're in a choppy market. You don't want the theta to pretty much eat up your profits, waiting on that move to get made for that price to shoot towards your targeted option strike price. So I like for the data to be at least 20 or above, and I like the theta to be below that 20. And if you can, if you have the liquidity or the money to do it, then go ahead and see how far you can push it to where the theta is probably single digits. You might only lose $4 or $5 a day just for swinging the contract. So that gives you time to battle the chop, battle the dip, and then for that contract to go back towards your strike price and go into money and above. So I think all of that is very, very important when you're looking at different strike prices and stuff. So good question. Let's see. Somebody got toast RGT. What you got up right now, little bro? APLD, Applied Digital. Okay. You can go and break that up if you want to, since you got the chart up. Okay. Applied Digital. Bro, you can go ahead and handle that. Can y'all hear him?
No, I don't hear anything right now.
Oh, I'm
Hey,
so
man.
sorry, man. I was talking to myself this whole time.
Oh, bro,
Jesus
go.
Christ, man. It's like I'm
Just,
still.
hey,
I
just,
apologize for that.
just start over, man. Just start over. We
Yeah,
good.
yeah,
We
yeah. Of
good.
course, no problem. So,
Go ahead.
yeah.
All right.
So I'm gonna start off with the daily chart. We had a bullish divergence here that played out from January. and it brought price all the way back up to 1249. And then we had a quick, very quick sell-off below the 200-day moving average. And it seems like price is really trying, kind of struggling to get back above it. I'm not feeling too confident about it because we also have a death cross here. A death cross, if nobody really knows what it is, it's a 20-day moving average over 50-day moving average. Normally, in this case, you do see more downside when you start to get this type of movement. For example, like when I charted SPY before, once the 20-day began to break below the 50-day, it broke and it kept going down. So that was like a little bit of a confirmation of that. And until it starts to break back above, you're still in that death cross kind of downtrend dip. You know what I mean? So currently we're kind of seeing the beginning of that over here. I was looking at the 4 hour because I was thinking, hey, maybe we're trying to get some type of bottoming formation going on here. It's trying to do it. I was looking for some type of bullish divergence to, confluence in that sense, but not really much here going on. I would like to see price get back above 7.74, maybe around $8 actually. Aiming towards 9 to feel more confident for it. Hourly chart is looking pretty neutral with the RSI as well. Formation looks intact. I'm looking down at the 15 minute. This is kind of what I'm worried about a little bit because, for example, bearish divergences, just like the bullish divergences, they mostly like to play out when they're there. So we've had a lot of bullishness that eventually took its toll on the price. And now we're seeing another bearish divergence that hasn't really fully played out yet. So I'm kind of watching to see if this plays out and then where price wants to go after that. This playing out would probably bring the price around maybe 680s, probably below there, trying to find support around there. So yeah, watch for further downside. Definitely keep that in mind. I wouldn't say jump at these prices yet. I would like to say if we get a clean break above 9, 822, 8.29 around there, and we start to see $9 again, then we could probably start putting money into this stock again for more to get into the momentum that is probably going to be showing up there. But for now, yeah, just watching these price levels, nothing there for now. What other
Um,
stocks we got in mind? What do you think, big bro? What you think?
let's see. Start the trading view back up. Okay. Applied digital, right?
Yes, sir. APLD.
I had a chart. I looked at it once before when it
This is the
was,
first time I ever tried this one.
yeah. So whatever that upstream that got beat up.
Yeah, that's what I was about to say. That they sold that off and some. You know what I mean? So I was thinking to myself, whatever they're
So
holding right now is this prior trend that they had before.
okay. So as of right now, we did see a massive spike up to the 12 dollars and 50 cent range. Since then, it's kind of been selling off. It filled the level of demand here. And the good thing about the stock so far is that it hasn't gapped down. We're just seeing pure price action, intraday sell-offs. And it's trying to push all the way down to this $4 range and possibly fill this gap down here. Um, Looks like mid $3 range. And this looked like it jumped Trump rally. The Trump rally looked like it pushed this one up. I think, no, that was something else. This was August, September, so early September. Could be. But this looks like it's where it's trying to get to, and I'm not even sure when this happened. It's $1 range, but yeah, as of right now, I'm looking for to see if the support right here at mid $6 range holds up, and see if we can find some type of either V shape or rounding bottom here. And if it does hold up around this $6.75 range, then we can look for a target back up to like mid $8 range, $8.50, somewhere around there. And this is where previous sellers were, and a few buyers were in too. So if we open lower or the price action happens to gap down again, we did see some consolidation prior to back in this range right here. So okay, so since we did see some prior consolidation here, we saw that it touched back inside of the zone one, two, and then this is the third time and it came out of it. As long as it doesn't just drain below this 575, we should see this will be a level of interest to see if we continue to hold up here. If not, And this consolidated area looked like it actually goes back even further because we saw some brief consolidation back here too. So this has just been a big level of interest in between this 585, 580, and 665 area. It's just been a big level of interest for this stock. So
Hmm.
I think anything below 575 would be sell prices, and you'll want to catch it on this big area fill right here back up to the upside. So um, I think that's what I got from it. If we go back and keep scrolling back further, it always gapped up around this $4 to $3 range, and it gets bought up around here. It sells off between 750 and 635 even after it explodes to the upside. It always comes back and just remains within this $5 to $6 um, price area. So like I said, anything below $5, I think is a steal. You should load the boat on it and ride it back up to the upside. So
Yep.
let's see. APLD, somebody said SoFi.
So fat.
All right, so I
Oh
got
wow.
that's
I have a
busy.
nice little level here. It's pretty interesting.
Okay. Let me go ahead and drop this and then we can go ahead and break yours down. You probably already got yours charted out, huh?
A little bit, a little bit. Yeah, I was looking at it before, and we are seeing a little bit of nice support here. I want to see. Yeah, you're probably gonna mention it too.
Go ahead. I got your chart up. You can go ahead and break it down.
Oh, I but so real quick, I just wanted to really mention, showcase the Fibonacci levels here real quick. So this is how I use my fibs, right? And I wanted to point out how we were almost gonna come down to the 61.8 level, but the 200-day moving average saved his life right here. We had a bullish divergence that seemingly played out, and we had a sell-off ever since there. And I feel like if we get price to consolidate around this zone that we're at right here, and we just try to break above the 20-day moving average, 13, 14, regain those price levels, we could see a nice little bounce back from around here. Kind of like Royalty mentions, you want to see those type of bottoming formations play out, and they usually take its time. Like you see here, you want to kind of catch whatever's going to happen around here. We might get a deeper sell off to the 61.8. It is always possible. But then again, if this level loses, you'd probably see more deeper sell off. But right here is where you want to see a bottoming formation. It's kind of what I'm looking at right now. You're seeing a little bit of bullish divergences on the 15 minute. They're playing out. Have probably a little bit more room if we have the volume in the right direction. Yeah, what do you think, Rosie?
Let's see. I still have it even charted. I was gonna wait till I was looking at it because I know some people like to watch me draw the game. Fans. I
Mm-hmm.
think that's something I'm gonna make hot, bro.
Somebody said, man, they need a 1 minute breakdown. They already asking for it, man. That's the stuff right there.
Man, I'm trying to spread the knowledge of the game fan strat amongst the masses, bro.
Yes, sir, man.
Man,
I'm liking it.
it's probably the only indicator that I really use outside of just, charting off of candlesticks. It's probably the only thing that I use because it just respects time and price. It doesn't fluctuate. You know what I'm saying? Like if it breaks below a
Yeah.
level, then you know eventually when it comes up, you know what level you're looking for next. So
Mm-hmm.
I just love it. But right now, I mean, off top, it looks like it's recovering. We saw since IPO in 2020, yeah, 2020, we saw that dip, kind of seeing that big um, bold formation right here, where it just accumulated price. This is what a bottom looks like, just on a bigger scale. This is what a bottom looks like when it starts holding a certain level right here, and next thing you know, it starts to come up into a recovery. So that's what we're seeing. That's what we'll be looking for on SPY and Qs and the rest of the stocks in the market. But we saw that nice recovery here, accumulation in price before it exploded up. Um, as of right now, um, what's a good trend? I mean, all I really can draw off top right now is probably something like this, and probably something like that. So, hey, that's the cup right there. And then we
I was
got a
just about
little,
to say that. I was
yeah,
just about to
we
say
got a
that.
little, little triangle pattern, falling triangle pattern right here.
Hmm.
So as of right now, I haven't even put the fan on it. If we start scaling into the daily chart, we start looking at levels. My deviations are lining up around 1125. We just filled or just came back down to a buying area right here. So going into this week right now, 4 hours shows a little gap that needs to be filled right here. So this could happen this upcoming week if prices continue to drop. Uh, let's turn that white or some that's gonna stand out. Purple. Okay. Purple will work. But as you can see, I always draw a straight line through a knifing trend just to show you guys there's no bottom forming yet and where it could possibly end up lining up. If you go down to the bottom of trading view, it kind of gives you an estimated time to where you can possibly see the candles forming it. But looks like it wants to fill down here between this 1150-ish range to recovery around here, which that lines up with the bottom of this trend, this triangle pattern too. So as of right now, we're just gonna look for a bottom around 1150. Upside probably by the time it gets back over here, upside will probably be around like this 1485 range. And what you'll want to look for is whenever we start to recover around here, you'll look for a breakout above 1485. You'll see the breakout, the retest, and then a move back up. And it's probably gonna want to fill the top of this supply zone right here at 1786, 1785. So this is just what a long-term chart looks like. I'm not saying it's gonna follow it, but this is a very good idea of what could possibly happen with this trend playing out. Even if it decides to form another little saucer down here and hold up around here and just let the price accumulate around this area before it breaks out. You know, $14 may be the level that it breaks out, and it still attempts to break the retest and then a run back up to the upside to 1785. So just going forward, this is what I watch for. If this trend doesn't hold up, then you will see prices start to come down here back toward kind of the top of this little accumulation around here. Feel this $9, 911 to $935 range before it wants to go back up to the upside. So we'll just have to see that how that plays out. If I was to draw the Gann fan on it, I'll go all the way up to the 12 months just so I can see the bigger picture. The bigger the time frame, the more solid the levels are more likely gonna hold up. And then once I do that, I go and I try to line up the bottom of the fan levels with the opening prices. Well, not the opening prices, but the lows of the corresponding 12-month candles. So once we get that, then I'll scale in a little further. 6-month, I'll probably adjust candles a little bit just because the prices do fluctuate, and of course it gets a little bit more detailed as we scale in to closer time frames. As we can see, I still haven't really found a decent um, uptrend, reliable uptrend yet. It may be one right here. I'll add a fan level right there, and it gives me more confluence with levels. As you can see, I'm not really seeing anything else just hold right now. Prices are just kind of trading to the downside. Um, and yeah, so this is still kind of what we saw earlier. I'm just kind of really fine tuning um, the trend lines as I scale deeper and deeper into it. This is so far we're just on the weekly, and then we go in deeper into the daily. And right now it's just showing you right now that we're making um, lower highs and lower lows as of right now. And this is on SoFi. So we just have to continue to watch it. If I put my deviations back up just to see where prices are falling with it, no, those the EMAs. Even if I throw the EMAs up, here's the 200, 180, and 200. This is acting as hard support. Could trade back up to see a rejection of EMAs coming down, um, which we'll watch it. We'll watch this. This would be the area to where you'll want to play the rejection. So anywhere in here as the EMAs come down, once it trades above 1370, you'll play the rejection back down to the downside. You get confirmation once it breaks these EMAs break over the 180 and the 200, confirming downside and giving you this price target down here to where the buyer still hasn't stepped in yet. So these are all just different ways to read charts, different ways to see how different you can see the picture. But the thing is, if you see multiple downside or upside on each different styles of charting, whether you're looking at the Fibonacci and the zeros at the top or the zeros at the bottom, um, whether you're looking at EMAs, whether you're seeing fair value gaps to where they're red fair value gaps or green ones, it's so many ways show you so many different ways of confluences to just give you a bigger picture on what to look for. Of course, MACD is showing that it's bearish. RSI is showing a rejection every time it reaches um, the yellow band. You get a brief breakout and you get a sell back down. Same thing right here. Brief breakout, sell back down, all headed to the 30 on the RSI. So I've just given you 1, 2, 3, 4. Here's trend lines, 5 EMAs. I'm giving you 6 different styles of confluences to show you which direction that a stock's headed. And all you have to do is put together the pieces of the puzzle. So um, I hope I broke it down enough. But what's the next one that y'all guys want to see? I think we got Palantir. Hey, trying to make it. You was just telling me about Palantir, wasn't it?
Yeah, yeah, I was texting you about it last night.
Uh, I'm pretty sure you got a
Um,
nice chart on it. Cool, you
yeah,
already
yeah,
got it up.
yes,
Go
sir.
ahead, rock out.
So I know Palantir has been quite a name ever since we've had this giant consolidation, and then boom, it made its debut all the way up to 125. And now the question is, are we gonna get back to the hundreds, or are we gonna be stuck below 70, 80s? Are we below hundreds? So what I'm looking at so far is basically we're getting some sort of bottoming formation. I like all these candle formations that are showing up here. I do see some sort of, the RSI on the daily is neutral. The 4 hour was on the floor, it's starting to pick itself up. The divergence has yet to play out. We need more, more volume. We need more confirmation from these levels right here. We're starting to hold. Let me mark out this level real quick. We've been bouncing very strongly from the 78 level right here, which is also a consolidation zone from pre-earnings, right? And this zone holds, we can get probably a break from the earnings high before the pre-earnings high. And then if we get a break of that, we can get MAs to start curling back up. The good news is that on the daily chart, the green MA is still above the 50. So we can get a little, this sort of action that we have right here. Let me mark it out. So you see how the green MA wanted to break below the 50 moving average, but it didn't. It kind of just smoothed itself back up. We could probably get that sort of action back here and probably try to get higher prices above maybe 85, 87 towards 90. So what I would like to see Palantir do is basically kind of like confirm this triple bottom formation that I have marked out here. This is the first bottom, this is my second bottom, my third. My neckline is the green line right here. And if we get a break above 90, which is the 200-day moving average, and support above the neckline, which is 91, I'd say we could start looking for bullish confirmation and add all the confluences to get in for some action above 91, maybe chasing 99. and refilling a little bit of what it's lost ever since earnings. So that's kind of what I'm looking at. I'm seeing another bullish divergence here on the hourly playing out. It hasn't got to his peak yet. Still have more room. So also keep in mind short-term fluctuations are possible. You know, we are at $84, so we can always drop back down to 78. So just keep in mind if the momentum is there or if we open lower than these prices, you got to see how price reacts from 78 if it wants to bounce back up or if it holds a higher low. Uh so yeah, that's basically what I'm kind of keeping my eye on for Palantir here. Not bad, not a bad chart overall, you know, especially from everything that has been going on. You know, this chart, this company from, you know, from what I heard and from my experience in trading, it used to be a meme stock around here. Actually, not even, it used to be a meme stock around this time right here. And then it started kind of making a name for itself. You know, Alex Karp, he's a great guy, you know, and he got a lot of stuff in his mind and he has a lot of things he wants to accomplish. So I'm not doubting that man one bit. What do you
Yeah, look at
think, Royalty? We also
look at
have a
all
gap
those.
fill here.
I was gonna say, look at all those bearish divergences you got until it finally broke out and squeezed to the upside. I mean, it's one, two, three, four, five
Look at
bearish
that.
divergences, and it finally squeezed and just pushed.
Look like that final dip right here around
Yeah,
62.
yeah, yeah.
But yeah, what do you see, man? What do you think about it?
Let's see. I'm not gonna get too many confluences on this one. I'm just gonna go ahead and get straight to it so we can knock out a few more tickers. Um, Palantir. Um, ugh. I I mean, this is what I see. I see this almost bearish pattern right here, looking like it's getting ready to break to the downside. Here's my 180 and 200 down here, and it's hovering right above my -3 deviation. So that just gives me like a temporary bottom, and that almost lines up with look like mm, I'll say probably this little area right here. That's what I'm watching. That's what stands out to me. So we saw that it retested the top of this consolidated area here before it took off. This bearish pattern in my head, even though we just filled this gap to the downside, and this is a bullish gap, by the way, after earnings, but I think it's gonna go down. Last time I saw this pattern right here was on Meta, and it was almost kind of like that, what we saw.
Mm,
And then we
mm.
saw that here's the knife down, and then we saw the consolidation here before it broke out.
Oh yeah.
It retested back inside the trend, and then it broke back down, back below the trend, and it's finally selling off again. So if I head back over to Palantir, it's not quite as aggressive yet as Meta, but we got that triangle pattern there, and then we also can see that we saw the knife action to the downside, that knife to the downside, and then you have the triangle pattern here. So the only difference is, like you said, it kind of has that bottom that's holding up a little better. That's what we didn't see on Meta, because we saw breaks below lows and then a recovery back up midway before it finally just tanked to the downside. So we'll definitely want to see if this holds up. 4 hour shows, I got some strong support, and it's running right alongside of my support level here at $77, $78. So this could play out. We do have some bearish EMAs coming down, which is going to try to keep the price action in check and continue to push it if it continues to move here. Um, we do have a trend line that is trying to get back above at 85, $84 here. So it's just gonna be interesting. I think it's gonna have to break out of this bearish pattern here above this $87 range, and then make a move back up to 92, 60, 65-ish in order to make that move back to the upside. So like I said, we're going to see a breakout above here, a reclaim of levels here, in order for these EMAs to start to curl up and start to carry back up to the upside. So
Mm-hmm.
that's what we're gonna watch for right now. I'm gonna say it's bearish to me.
Mm-hmm.
4 hour has EMAs coming down. Um, the 2 hour already shows it's trading below the 180 and the 200, along with the bearish EMA cloud coming down. And then the 1 hour is weak, but you're still trading below heavy resistance. What used to be support over here, now resistance over here. You're now trading below that. So the more this 4 hour creeps down, the more that this daily ribbon or EMA starts to flip and turn bearish. We might see some more move down, more movement to the downside once it breaks below this strong support level. You'll look for the breakdown and then a retest. You'll look for prices to break below here. Uh, to break below here to this $71 range, possibly retest back up to 77.50, and then a move back down. I'm not gonna say this far down, but eventually it probably want to go and retest lower levels here around 56, and that's if it doesn't recover and we continue to see this daily EMA continue to come crashing down on top. So it's possible that they can retest, drop halfway, come back up and meet this EMA somewhere down here for a retest of 77 where it rejects there. But until it just completely shows some support, I'm bearish on it right now. I'm bearish on it. We just gonna have to see how this support level holds out right here.
Yeah,
Um,
78 is key, man. If we lose
yeah,
78, that it turns into a bear flag and all else out the window. That's bearish as hell.
yeah. We'll just want to see how this holds up right here and
Those are
see.
EMA clouds, right?
Yeah, yeah,
Yeah, those are great, man. Yeah, I like that. Until we turn that cloud green, man, you're right. There's really no other, we have to break above those levels, like I mentioned before. So that's why I told everybody, we need to see 91. We need to be confident for now until we're in this chop zone. Really not much to do.
yeah. So that's that's what I'm looking at so far on there. ACHR. I think this is something that we've been talking about in the Discord.
Yeah, yeah, it's definitely a name that we keep an eye on sometimes every once in a while. I know some people have that in their long port.
Okay, so ACHR, aerospace and defense. I don't know. I don't know if there's any aerospace and defense stock right now that is actually doing good. Real
It's the only
quick,
one I know.
BA, they're flushing back down. Lockheed Martin,
Those are all aerial defense.
yeah.
How's
It's been
BA been?
gapping down. BA getting slaughtered.
Oh, yeah, oh my God, Jesus. I should have been on BA because if I was on BA now, I would have called all these moves. Remember when BA back in the day, man? That used to be our summer stock.
Yeah, used to take care of BA. I ain't gonna fake.
I
But yeah,
left her alone and now she's dropping, going crazy.
long term BA just been suffering, especially with they planes
Everything.
getting towed up and everything. But
When you mentioned planes, I saw a plane literally in the window level. I'm not even playing. That's why I lost internet for like 2 seconds. You started lagging and everything. So I don't think that was safe. I hope everybody's okay.
oh
It was a
wow,
crazy it looked like a movie scene. I'm gonna be honest with you, bro. I'm like shook up.
wow, that's crazy. I don't know
Yeah,
how
I
I
just
feel.
if something does happen, I will drop a link in the Discord, yo. God forbid, but
Facts.
it looked like an
Um,
emergency landing. I'm gonna be honest with you, because I'm like a couple miles away from Teterboro. I'm airport, so
okay,
they were probably doing like crazy stuff. But yeah, guys, aero defense stocks scary right now.
definitely. I don't know much about Archer. I just know a lot of guys like to trade it. As of right now, we're seeing a trickle back down to the downside. Um, let's see if we can find. Here's our little knife point here. There's our little knife point. It's trying to get recovered around this 200 EMA on a daily, but right now I got a bottom around 615 and then 530. So those would be my two levels of support. The good thing about it is I don't really have much resistance. You may see a retest of like this floor right here that's now gonna be the ceiling or resistance here. So that'll just be the only thing that I watch for. But of course, you can see that we've consolidated a lot. Well, I ain't gonna say a lot, but pretty recently around this 679, 680 range over here. So this is kind of where we're holding up right now. If we see prices lose to 679, then you can see movement or flush back down to the downside. We had a sharp move to the upside, so we might can see a sharp move back down to the downside just because, what we see on one side, it's a high chance that you'll probably see it on the other side. We've seen consolidation over here. We're looking at a little slight consolidation on this side too. So watch for the move below 680, and if you lose that 680, then we can see the flush down to this mid $6 range down to the mid $5 range also. So somebody said Archer Aviation vertical takeoff. Hey, it's I don't know if you're talking about the stock price or the actual Archer Aviation, but um, these support levels are, I would say, buy 'em. Mid six, mid five, even if it comes top of the $3 range, low fours. I would say buy just because it doesn't have a lot of um, resistance. And if I take away some of these moving averages, which I don't like to trade with them on because sometimes they can show you false breakouts or false breakdowns. So I try to stay true with the price action. I just use those kind of as a confluence when I need them. But I mean, we look at the long term. It doesn't have just a super super high ceiling, but I mean from $5 all the way up to $28 or $27. That's a big move for a stock like this, especially people are loading up on like hundreds and thousands of shares for them. So um, down the long run, it's definitely going to be a nice buy and hold from these levels, especially when they go and retest these highs at 1248. Let me see. It IPO back in 2021. So
Oh, it's
yeah,
still relatively new.
yeah, it's still relatively new, and once enough money flows into it, and
Mm-hmm.
it finds some support either at this $6 or $5 level, even if it goes back down to the $4 level. I think that it can move back up to the upside and have a nice return some years down the line back up to
Mm-hmm.
$15 and then possibly to 25. So um, that's a nice load up. Were you going over it too?
Yeah, a little
Okay,
something. I
I got
completely
you
agree
up.
with what you're saying. Mm-hmm.
You can go ahead.
So basically, what we were going along in confluence with what you were saying, we're back at this uh chop zone that we saw back in December. So it's not like price is looking bad at these levels. You know what I mean? The 200-day moving average hasn't been tapped yet. Technical analysis wise, don't be surprised if it comes down and tries to retest, test it just for a secure support. But currently, we do have an MA break. Not it is bearish, but with enough break above these levels, like I'd say above 896, you could get this to curl back up immediately. But we're looking at the hourly chart. Like I said, we're chopping in this zone right here. Basically, I feel like we're chopping in this giant candle that we had February. What was it? February 28th, Friday. Just chopping between this move right here. We're selling it off slowly, possibly sell it off further. Maybe tap the bottom of this wick right here before we see some real bottoming. But yeah, just looking for the consolidation below those levels. Like Royalty said, definitely a buy because I feel like the biggest challenge moving forward for the stock would be, holding this actual support up here. You know what I mean? If we're back in this consolidation zone, then we get back above this zone right here and we actually maintain it, we could actually start seeing higher price action and support above these levels for, like you said, retracing those prices that we had before. Definitely possible down the road, down the years, especially with whatever news the company drops. Hmm.
Okay then. That's a solid breakdown too. Like I can see that consolidation between 665 and that 896 to $9 range, I could definitely see the price being consolidated within there before it decides to make its next leg to the upside. For those who just joined, what ticker is this? This is ACHR. Yeah. So that's our take on that. Somebody say AppLovin. Uh, AppLovin. I think I looked at that one.
Royalty, I'm telling you right now, I'm shorting the crap out of this thing because of Robin Hood trivia. I'm just letting you
What'd you say?
know. I'm shorting the crap out of AppLovin right now because of Robin Hood trivia.
For real?
I'm still so salty
Wait,
about it.
break me into this.
Like,
What is this?
dude, I would have gotten $1,300 in Bitcoin, dude.
Eee.
Oh, that was the question that you missed.
yeah, yeah. They were like, which one had the biggest return from January 2024 to December? And it was Palantir, Nvidia, and then it was AppLovin. And I was sitting there, I was like,
Bro,
I know Palantir beat Nvidia. I knew that for a fact.
I
Turns out
wish,
AppLovin was up like 700% at one point, and I was like, what kind of
bro.
crap is that? Like, it's
When I
wild.
when I seen AppLovin, I I was like, God, like what happened? But yeah, I would have told you, man, go with AppLovin, man.
Yeah, I
But
learned. I was like, I should have asked, like, it should have. It can't be one of those obvious questions. It has to be like one of those, like, just like why would they throw Palantir and Nvidia in there and not throw something else in there? Like they threw that third one in there for a reason.
hey, they threw Palantir in there because they knew everybody was gonna pick that.
Yeah, but hey, man. I
Yeah,
mean, but rather than that, I mean, I was doing so. I looked at some of the intrinsic value for it. And it's like 330 something dollars is like the intrinsic value long term with the growth they have. So
yeah,
I mean, long term still has some upside, even though I short the heck out of it. I'm just like
man.
not a lot, like not a lot of money, but like it was just
You just finna
so
get your
frustrating.
dollar. You finna
Yeah,
get
I'm
your
just
questions worth.
I know we say never to revenge trade, but like to me, like that's revenge trading for me. Like I'm literally just like I'm out for blood. I don't give a crap. Like
Hey, do what you gotta do, man. Do what you gotta do.
mhm.
I'm looking at it. I mean, I know the pricing will have to come back down with the way that it just flew to the upside. So, um,
Definitely getting some capitalization there.
bro, this stock went crazy, man.
Look at
I
that. All the way
wish.
from 518 down now to 270 is insane, bro.
All right, so along with the rest of the market, we're knifing to the downside. Um, let's see. It just bounced off of a strong level of support with the 180 200 EMA. Let's look at my stuff. Okay, my deviations got us lined up. The bottom it'll be around like this beginning of the gap up. So this gap up happened earnings. It went from 176 to 228, and then from 228 to freaking 525. It went to heaven down there, but um, it went crazy. It went crazy, bro. But yeah. So far, I look for any type of support if it continues to fall to the downside, because the knife doesn't look like it's finished knifing. But I would look for support anywhere down here around this 211 to 212 range, even if it continues to fill. Sometimes major gap ups don't always fill. I think somebody said AVGO in the comments to look at. AVGO took a while before it finally filled. And guess what? It didn't fill this gap down, actual gap down level until the next earning, which was the one that we just saw. So this is the old ER. It gapped up, then it halfway filled it with the deep six scare. Halfway filled it, bounced back up, and then going into the actual earnings, you finally see the level all the way filled. So we don't always see the gaps get filled, and sometimes it takes a whole nother quarter for that actual gap to to get filled before it finally does. It just depends on the price action pretty much. So, like I said, right now I got support around this 211 to 212 level, even at 197. Um, if we lose that 197 level, then we got a straight flush all the way down to this 103, 105 zone, which is this trend right here trying to hold up. So as of right now, I want to see prices reclaim 288, 289, 290. I want to see it reclaim levels up here before I just decide that, hey, we might see the real thing and then move back up. The scariest thing right now is to do something with Tesla, like Tesla showed us, to where prices climb so fast, so quickly, and then you thought that you seen some bottoms like right here, it bounces and it comes to almost an arch and just decides to dump all the way back off to the downside. So definitely you want to wait till it reclaims. Just think about it like this: the lower the price goes, the more strength it's going to have when it decides to return back up to the upside. So I would like to see prices break above this 288 to 289 level, reclaim that level, and then it's probably going to shoot for the supply zone that's unfilled up here at 366. And this would be a temporary top for now. So you got all this level down here to buy up accumulation, and then my first actual wall would be the top of the supply zone at 366 for AppLovin. So um, let's see. You got up AVGO.
Yeah, I
Cool.
was just looking along here with you.
Okay.
I completely agree. We have a great gap fill here. Support off the 200-day. That wick, you see that giant wick candle that brought us up all the way up to 194. Looking great if we get back above 206 and just, reclaim that gap that we filled. Reclaim that whole area and then chase higher highs, 222, 236. We got a lot of room. I definitely agree. The daily RSI is definitely oversold. So that's a good thing about it. You know what I'm saying? This hard pickup right here definitely shows buyer interest. So, if we get a continuation of interest at these levels, it's very good. Look at all of these divergences along this downtrend. Definitely going to be a time where eventually, maybe all these played out already, kind of. I guess they already played out. So I guess now we're kind of looking where price is going to go next. So yeah, disregard those divergences. Price is kind of trying to find support here. So definitely agree with royalty there.
Uh,
Above 206 is looking better. Looking at support here on the 5-day moving average.
come on.
20, yeah, 20 MA break above the 50 MA would be the ideal picture for me to get into calls above 212, targeting higher highs.
Okay. I mean, it looks good. I just got the alert saying that U.S. stock futures drop after weekly slump as Trump tariffs and Powell comments weigh. It's already it's already not looking too good for the market.
We're gonna start off the
Um,
week crazy already, huh?
it's possible. I
I
I
got the
hope
same
it's not too
notification.
crazy.
It's
Right.
tough. I just realized that they were talking about I saw the same thing you're talking about royalty. I got the notification about the future slumping and all that, and they're talking about also how Canada is going to have a new prime minister coming into this whole economic
Oh, I
economic
got there
craziness.
earlier too.
Yeah, Justin
Mm.
Trudeau stepping down, so he's out, and now it's going to be interesting to see. You have some guy who's brand new now coming in to be the prime minister of Canada.
Oh man.
How is he going to take this whole thing? So they're starting to be like, all right, there's more political uncertainty going on here. Like it's gonna be interesting for sure. And I also
It's gonna be
realized
a
also that
ride.
yeah, it's gonna be a ride. And there is data on Friday I didn't know about. It's Michigan's University of Michigan's consumer confidence data comes out, and that's what like lined up like I think it was a couple weeks ago, where the market like tanked like 1.5% or something like that on Friday, and it was
Hmm.
because consumer confidence came in from Michigan like super low, inflation was super high projections, and it just like lined up for disaster. So there is some data on Friday. I realize I don't know how much it will impact the markets after inflation, but the headlines I saw is now they're talking about inflation data and what's going to do for the market here. So should be an interesting one.
Okay, I was reading your comment. You told somebody I'm shorting the app only because I lost the Robin Hood trivia.
Y'all put that on the shirt, man.
Yeah,
Okay,
my make Fridge Financials merch. First one's gonna be I lost Robin Hood trivia because of AppLovin, and it's
I
bro.
gonna be like
swear.
If
it's
you
gonna
would
be
have
a one
shorted
of
that,
one shirt. I'm gonna make it the same price as AppLovin stock is, just to piss it off.
that would have been a crazy short, bro. Especially if you would have shorted like when it started knifing to the downside, bro. That'd have been crazy. You would have made all your money back. You could have
Mm-hmm.
bought you
Yeah,
a Bitcoin
yeah,
by now.
Yeah,
Like
you could have got the Bitcoin.
you could have bought you a Bitcoin by now.
right.
Yeah. So we'll look at RGTI and then TOST. And those be our last two for tonight. So um I
Sounds
got
good.
uh,
Sounds good.
I got RGTI up right now. It traded partially up to this gap fill area. So it's still gonna be bearish below this $18.19. Price is still gonna be bearish. That's all selling supply here. Best thing that you can do is have appropriate levels to average down or buy going into here. So it just filled this level right here around look like right at $9. It filled the gap right here. It had a little overreaction dip and then it traded back up to where the bear should be. Going into tomorrow, we want to see how this opens up. Make sure that it's not gapping down again. Let's look at the 1 hour. So it does have another gap down here around the $6 range, 6.30 to 6.15. It has another gap, so we could see this knife in action continues, even though it has broke out a little bit. Um, if you're looking on the 2 hour and probably the 1 hour too, this is where it get mixed up at. You got a gap up here, gap down, gap up, gap up, gap down. So that's a clear indication that um, consolidation is coming because this is where the bulls and the bears are starting to fight. So we could watch if it dips down more. You can watch for a fill around this mid $6 range. This also lines up with support, so this would be an area that I would take shares at if I was to grab shares. Even if it dips, um, the next support level will be around this $4 range. So it's a greater return. If you buy at six, this is probably like a $2 loss that you'll take, but the upside back up to six, the upside is still back up here at $14. So you might take a $2 dip for a $10 return. And that's all buying shares or averaging down is having the appropriate targets to average down, having a plan for where I'm going to buy it. Like this is what limit orders are for. If a price reaches a certain point, automatically buy that, and then if it dips lower, I know where I'm confident at buying it. So that way, I know the window between here and here, and the return is gonna be way greater, and I'll make my money's worth instead of buying somewhere up here where you don't know where support is. Now, as far as long term, it does have a lot of up room. Um, up to 28ish, 29, up to 44. But right now, it has to get out this channel right here between $6 and $14. So any dip right now is good as long as you have solid levels. My dip levels will be 640. It'd be $4, 275 ish. And I don't think it's gonna go back down to these little 80 cent prices, but these would be my levels to buy if I was to buy the dip on RGTI. I'm still not big on quantum. Well, let me rephrase it. I'm big on quantum computing. I just still think that it has some time um, to really get worked on it and show that it's in progress. So um, that's my take on it. What you got, make it?
I was looking at toast, man.
All right, make them.
Oh yeah, trying to break down toast real quick while you were trying to break down RGTI.
Go
Toast is a very
ahead.
interesting stock. Yeah, yeah, of course. Toast is a very interesting stock. I'll start off with the weekly, you know what I mean? Like other stocks that we've mentioned here, like Archer and other stocks that have started, like around 2021, they all had that big sell-off from their big jumps and then a lot of basing and then finally breaking out of the basing. And the next goal from there is, you want to support above previous consolidation levels. Now zooming into the daily, we have a perfect bounce off the 20-day moving average here. And then we're trying to retrace back into this little wedge that I kind of marked out here. It looks more clear on the 4 hour. Yeah, as you can see here, I marked the top of this, came down here. We almost tried to break out the wedge that one time, came right back in. The moving averages never confirmed a bullish break here, so that's why going long there wouldn't have been the most ideal thing. And then coming down all the way down here, we're starting to see some type of basing formation here. But I need to see more of a bottoming confirmation. I do see a bullish divergence on the 4 hour, which I am taking into account. But if we could hold 32, 31, lowest around 31, this would be like the previous consolidation zone that we had. If we bounce off that, that'd be a great buy. Strong support there would be a great buy, and then confirmation above 35, 36 to shift the momentum, getting back into zones like 38. If there's any bad news, I'm not really 100% sure what the stock is about or what they do, but I guess any bad news could bring it right back down into this consolidation zone. But for now, we need to hold support. We're at a level of holding support here. Very strong wick off the 200-day on the daily chart. That is something I do like. What do you think about this stock here, Royalty?
Let me see. Make sure my mic back on.
Oh my gosh.
Okay. Yeah, y'all can hear
Okay,
me.
I thought my mic was muted this whole time. I was
Nah,
like,
nah, nah. We heard
okay,
you.
perfect.
I had to make sure my mic was
Royalty,
on.
think your mic is muted.
Okay, can you hear me now?
There we go. Yeah. I thought it was
All
me,
right.
but it was you this time. No
Okay.
problem, man.
What style we was looking at? This one.
Toast. Sorry, toast.
All right.
Is it a
So,
company that just makes toast bread? Like,
hey,
curious.
nah, you was saying that I had my mic muted, bro, because I had just ordered some Dominoes, and
Oh
like
yeah, my boy was getting busy. No
bro,
worries, man.
I was over here chomping, bro. So
Of
that's
course,
why I
my
was trying to
boy.
make sure my mic was on or off, so that way, working on this piece over here. But
Yeah,
Toast,
man.
I thought I looked at this ticker once before.
Yeah, talk to me. I'd like to see your breakdown on it. This is kind of like literally off the bat analysis. I have no idea on fundamentals at all. Straight TA.
Yeah, technology service. Hey, these companies right here, these technology services and package software companies, bro, they
Okay.
move. They move like Microsoft is one of them. It's a list that I had that was full of them. Um, is it this one? Yeah, like let me see. Like, nah, not match. Pan W is one of them. Technology services, package software. Um,
Payment platforms are the future. I definitely do think that, you know what I mean? Like
Fidelity. Yeah.
Square, right? Isn't that one too?
EA. Square might be one, but I just be searching through tickers, Tremble. I be searching through tickers and just looking at, different sectors trying to find where the money is. And I come across a ton of stocks that are at a dope. I just don't know what they do, so I have to take time out to just research them sometime and see what they do before I actually start put my money into it. But Toast just filled it just filled this gap down to 32.75. It's pretty dope. Um it's bearish below 41. So that's where the gap downs are. So even though I said that it's bearish below that, it doesn't mean that it's going back up. That just means that this is where prices are going to try to, squeeze back to the upside yet. But we are catching a knife to the downside as of right now. Well, not the knife, but it's a slow control dip to the downside that we haven't really broken out of yet. I always draw my downtrend through the center of the down and the upside of it to try to see how long it could last. Um, this chart's tricky. I ain't gonna fake. Let's see where
Yeah,
we
I
come
definitely do
from.
agree. It's
See
like
where
a
we
little
come from.
puzzle.
So let's see. IPO back in 2021, July 2021. Looked like they sold off of the IPO prices. Um, got a little bottom forming around here. We take the deviation out there in the way. Okay, so we got a little bottom action around here. Now we're trading back up, trying to reclaim at least halfway back up to IPO prices, at least back up to the closing price. Opening price up here, closing price right here. This is the opening price the following, let me see, the following quarter. This is the closing price of that quarter by the time. So this is, you watch 3 month candles. If you're trading below that opening price, let's say after earnings or something like that, then you can kind of keep the sentiment on whether the stock's bearish or bullish. If your opening price is here, you decide to take calls for the quarter here. As long as prices stay above this opening price, then you will make profits. If it drops back below, then you know where you want prices to get back above for you to make profits. Um, and this is another style of trading to where you can keep track of opening and closing prices and see where bulls and bears stand each quarter of every 3 months. So you can literally go through and label these prices and use them as reference spots to buy, and it gives you levels of interest without even having a chart. So you literally can go back down to the daily and it'll show you, all right, if we broken below one of these prices, which was a level of interest, all right, it broke here, rejected. Now it's trying to get pulled back down to one of the previous levels of interest, which is around $28.56. And you know, finding this and reading the chart like this doesn't take long. It took me literally about 5 minutes in order to just find some strong reference price points, put them on a chart, and then go back and then just watch the price action to see um, where the sentiment is. So, I mean, as of right now, like I said, we still got that knife in action. It rejected and lost its $36 price range. Here we are headed toward this $28.55 dollar price range. If I wanted to put the GAN fan on there to get some actual fan levels, start at the 12 month. That'll be my first fan level. Looks pretty solid to me. As you can see, we're still trading within that fan level here. So you will look for prices to lose anywhere below here, and we can start seeing prices fall within this fan zone here. So if I go to the 6 month, I will look for any other, possibly solid uptrends that I could take and add another fan level to, which I might can take this one right here, which was these two. So it kind of gives you that squeezing action right there once you start getting in deeper and deeper into the TA. So now I'll draw another one right there, which I line this one up with this candle, and these two candles, which gave me an extra fan level here. And then once I go down to the daily, I don't really need the weekly. Once I go down to the daily, I can really start planning out my analysis for it. So we see the price kind of, melts to the upside with a nice slow control, buying here. So you'll want to either watch for something. If this doesn't hold up, which this isn't, in my eye, this isn't really much, support. This isn't really strong support here. Something was going on that I guess it was leading up to earnings. It traded all the way up to the upside leading up to earnings. So this isn't really a strong support system for me going over here. So either it can make a kind of a similar slow control sell to the downside, or we can just see a straight knife action continue to fall with what we currently have now. Those are the two scenarios for me. If I look at the EMAs, probably going to start to see them curl to the downside. Here it is. You're going from green to black. I think these are originally like white or something like that. I just like black because if it touches black, that means stay out of it. Um, so this is what we're seeing. EMA cross. I use the 34, the 50, the 34 to 50. What was this one? I forgot some of my own EMAs. The 21 to 34 to 50, the 180 and the 200. But we start to see an EMA cross here to the downside. If it trades back up, we're going to see a rejection possibly around this 35-50 range once these EMAs starts crashing back down on it. Like I said, these are the two options that it can take. Either it can come back down, ride this wave out here, or it can just take the sharp fall all the way here and follow out with what's happening already. So if we're seeing this 4 hour already transition, I'm pretty sure the 2 and the 1 are both rejecting. See the rejection right there, possible rejection right here back to the downside. If it opens up and prices open below both of these trends, then you're gonna see the prices roll over. Um, you'll see the prices kind of roll over around this area right here. So if it gaps down and we open down here, you'll see prices come back up, reject, and then you'll see them roll back over to the downside to shoot towards this 2850 range. The deviations say 3070. So somewhere it's just in between here. These will fluctuate some until it finds a bottom, but that's just my take on it. You'll watch for this rejection here at 35. I'm bearish on it. If we open below this 32, look for the rejection back up here at this $34 range for the move to continue down to the downside as of right now. If we gap up and we open up here, this above 35, 36, if prices sit right here, then you'll see them EMAs start to recover, carry it, push it back to the upside. So if prices open up here, then you'll start to see a move to the upside towards this $41 range, and then you will see the 200 still come to the downside, but then you will see this 2134.50 combo come back around and push it, and then you will see a nice little cross somewhere up here that's helping the price move to the upside. So you always have to look at stock prices from both situations, so that way you're just ready for whatever um, the price action throws your way. So um, I think that's pretty much everything. Your Sunday night is my Monday lunch break. Thanks once again, you guys. Love, appreciate it, appreciate it.
Man, that
And
gap fan precision is insane, bro. I'm not gonna lie, bro. Seeing you pop out with it, bro, and seeing all those support resistance levels just line up once you had it up, it looks like sorcery.
man, it's come from day after day, after night, after years of
Fire.
just playing with charts, bro. Um, like I said, this is what I'm trying to give back. I've been writing and typing and trying to get this little ebook out for the family, bro, of all my different styles of trading and the different types of confluences I use. Once I get that out, I'm gonna go ahead and drop that, and that's gonna be included with the mentorship, the 12 styles of trading with royalty, 3 month boot camp. It's gonna be it's gonna be lit, man. I'm gonna literally try to get everybody trading to be self sufficient, man.
Hell yeah, and that's the whole point, man. Self-sufficiency. A lot of people want to like be out here, getting people to subscribe to them and have them depend on Signal for the rest of their lives, not learning anything, just depending. And that's not what we're here for. You've always been the type of trader to like guide people and like show them the way. So yeah, it's very much a huge opportunity that you're getting, you're giving out to people to learn all these amazing indicators and their uses and how to read charts. Fire.
Yeah, yeah. It's helpful, man. Like I look at news maybe literally once a day.
Me too, man.
Unless it's just something breaking news, I don't look at the charts. I mean,
Yeah,
I
right.
don't read the news. I just look at the charts. But somebody said I need to learn this field fan. Hey, man, the game fan is like my go-to, bro. I've been using it probably about uh maybe close to about 8 months now, and it just gets better as you use it. Teach a man how to fish. Hey, bro, he'll eat for a lifetime. Facts,
That's how we
facts.
do it. That's how we
Hey,
do it. That's how
you
we do it.
give a man a fish, he'll eat for a day. But
Sure.
I appreciate everybody for tapping in. Any words of wisdom going into the week from y'all? Fridge, fish, make it, anything?
Fish pieced out like a little while ago. I don't know if you saw
Okay,
it didn't or
okay.
not. So, which is funny because this dude talks about teach man to fish, and then it's like, oh, new fish would have been here. Would have been a great little segue for him. But
Yeah, I was expecting him to pop in. I'm like, wait.
Okay. Well, Fred, you got anything to pass along to the family this week? Any words of encouragement, bro?
yeah, man. I mean, honestly, it's all about just reading data, man. Like I get up in the morning and I'm like trying not to be like that teacher, but like I'll be teaching in class. I'll be like kind of looking over to see what comes out at 8:30. I'm checking my phone for economic data and all that. So, but honestly, it's a grind. It's a thing you gotta learn every single day. You see what the market's doing, how they react to things. We all learn. I'm not like a Wall Street expert or anything of that nature, but just the more I learn things, the more I can see how the market reacts to it, the better position you put yourself in for the future for sure. So I love learning every single day. It's all I'm doing is I'm reading economic data. I'm gonna get off this stream tonight. I'm gonna read about the JOLTS report, read about CPI, and see what people are thinking already. Because the more you get that understanding, the more you can react to it. I know I put it in the chat a while ago for tonight, but it's the idea of right now in this time period, reacting to the trade or reacting to the market is probably your best bet. Right now, waiting to see what data comes to you. Let the data come to you first, then you can be able to react to it and make a decision based off of that. That's what my advice would be. If you want to watch my degenerate side, I got my new week of Chat GPT picks the trades. It's gonna be a fun one. People like it, and I put a new video out of on it this morning, and
Yes,
it's kind
sir.
of goes over the whole strategy and stuff like
hmm
that, which is like the whole prompting, and it's you get 25 minutes of unedited Fridge Financials, stupid commentary as I go through everything, trying to battle Chat GPT. But it's a fun challenge, man. Like I said, I tell people all the time. I'm almost 3 months into the challenge, and I haven't blown the account yet, which is actually like kind of impressive because I thought I would have
That's
blown it the first
fire.
week. So you do a little bit of my charting, and again, kind of like how you use, the gang fam and stuff, or the GAN fam, whatever it's called. I don't know what that is. But I'm
hmm
someone who loves to use I use the Fibonacci retracement levels. I love Fibonacci. I've been learning around that my whole life. So if I had people use Fibonacci retracement levels, it's kind of helped elevate this challenge, I think, and it's been an amazing journey so far. So if anybody wants to watch me be a DGen for the next week, and every week going forward until the account gets blown, you can obviously check out all of the stuff I put on After Hours, YouTube, Instagram, you name it, it's there.
And Fred, honestly, the game
What's up?
fan, it's a
Yeah.
derivative of the Fibonacci levels.
Oh
So
yeah, is it?
instead of it being vertical, it's fib levels in a fan style. So
All
that's
right.
the reason why I
I gotta
stuck with
I
it.
gotta pick your brain on that. Yeah, that's awesome. I gotta pick your brain on that now for the next little while because I would love to know more about that for sure. That's awesome, man. But yeah, I think it's just if anybody here is still watching this point, if you have any questions, economic data questions, I know Josh talked about the Chinese CPI data. I know that's what showed in deflationary values. I will be writing up something about that, Josh, because right now I have to grab my head around it because I'm not that familiar with it, showing deflationary values and everything. But any kind of questions, economic data. If I don't have the answer, I'll go out and find the answer for you guys. Thank you guys always for the support for the community here. It's been absolutely awesome, and I'm excited to be here for another week. It's amazing,
I
man.
think
Thank you, Royalty, as always.
I think Fish got off to go buy some more Bitcoin. Honestly,
He's like,
bro,
oh man, I need this dip.
bro, he seen my alerts go off probably in the Discord, like buying zone, and he probably went in and bought some more Bitcoin.
Wouldn't doubt it.
but but yeah, man. Hey, trying to make it. Any words of wisdom for the family going into the new week?
Oh yeah, of course, man. Just practice caution. You know what I mean? We're in an uncertain administration. We have a lot of news dropping on our heads. We're not told beforehand what's gonna happen. So if you guys want to catch me live every day of the week, I will be streaming live in the kingdom, how I react to the market, trades that I'm gonna be taking live with the people, and I'm gonna be signaling as well. So yeah, catch me in the kingdom around 9:15 in the morning is when I start to get in, do a little pre-market analysis, and then catch the first 15-minute candle open, and then we get it on. So yeah, appreciate everybody that tuned in. Appreciate the opportunity from Royalty as well for having me here. And we're this week we're just gonna be focused on reacting and not predicting, and that's all we ever do. React, not predict. And that's what TA is for. Thank you.
The young goat, young trying to make it. Any words of wisdom from me? Be safe. Don't trade what you don't have.
Hmm.
Look for levels of confluence and be careful with trying to buy the dip right now, but also be careful of trying to time the top because this market it knows how to play with your emotions. It knows how to play with your the psychology. It's been getting people out of money for since it's been open. So you definitely have to be careful and know why you're getting in and why you're getting out. If you're unsure, stay cash. Can't lose money with cash. I also read something that it say that a lot of investors are going to dividends right now. Coca-Cola, AT&T, Johnson and Johnson, they're actually outperforming right now. Pepsi, I think those slower companies they're actually outperforming right now, and people are investing in those to get that increase in prices, plus to get the dividend to give you an extra little boosting in in portfolio profits. So it's always a way to play the market. You guys just have to be educated and know where to find the money at. And like trying to make it was said, if you're interested in a trading community, tap in with the kingdom. If you're on after hours, go ahead and look into mine's or his bio. We both have links to join the kingdom, and you can also look me up on Patreon, Royalty Trades, and you can join from there and get the automated link to the Discord. I will be dropping the more details to the mentorship pretty soon. Like I said, once I get all of these strategies leveled out for you guys, I'll be opening up the spots pretty soon. So appreciate you guys for tapping in. Kingdom Podcast episode 4. Like, share, and subscribe. Thank you everybody for tapping in. We'll catch y'all in the morning. We out.